Hi there. This is the routine weekly traffic light update for the week ended on January 13th, 2017. Prior to going into the detail of the presentation, here the disclaimer. Traffic light and capital appreciation point are the results of proprietary risk analysis models and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the typical agenda. We will review the S&P 500 traffic light, Dow Jones, NASDAQ, and we'll be looking for bearish and bullish trades. Here's the traffic light S&P 500 at the end of January 13, 2017. Traffic light S&P 500 is a long-term indicator. Let's review the legend. On the x-axis here represents time. Its oldest period is on the left-hand side. The latest period is on the right-hand side. Blue line here represents the close price of S&P 500 ETF SPY. The price information is represented on the y-axis on the left-hand side. Green line here represents traffic light S&P 500. And the purple line, horizontal purple line, and red line apply to only the green line here. The horizontal purple line is the threshold to re-entry the S&P 500 for the long term. The red line is a long-term conservative line. When the green line crosses the red line successfully, it is better to take a long-term conservative positions. Traffic light S&P 500 is showing less long-term risk now as it continues its descent into almost to the green zone. Monitoring still required. In 2000, the breach of the red line here took several tries. From the clip on November 18th, we compared the current situation to that of mid-2012. In the mid-2012 period, as the index broke the new high and ascends further, there was some pullback in between. Each pullback is less severe than the previous one to keep the long-term bullish trend intact. Let's observe if the current market shows the similar traits. But be aware of that the current price-earning ratio of S&P 500 is more higher than the PE in 2012. Let's look at traffic light Dow, an intermediate indicator. This indicator has a good history showing the intermediate bullish and bearish signal, especially when the bullish red line cross above the green line, shown here. In 2000 and the bearish green line cross over, showing divergence. It's about here. In 2010, when the red line continued to make new high as the S&P 500 closed higher, the market's bullish trend intact. In 2011 period, when as the index makes new high, the bullish red line does not. Eventually, it leads to a more severe correction. At a macro level, in September 2016, we can see the red line reach an intermediate max or long-term resistance area, but also made a new high relative to 2015. I will zoom in the next slide to see where we are. Here are some bearish and bullish view. On the bearish side, there are 2 points. First, the red line is descending. When the red line starts to descend at the resistance level, it is usually the end of a short-term bullish run. Second, the bearish divergence could be forming. As the index moves higher, the red line does not. But it's not confirmed by the ascending green line. So far, the green line is descending or holding steady. So on the bullish side, the green line continued to descend. I would say cautiously intermediately bullish trade continues and pullback are expected. Here is traffic light NASDAQ Composite. We can see the similar things in traffic light NASDAQ. As you can see, traffic light NASDAQ red line made a new high, all-time high recently. At the current reading, this is the highest. A couple of weeks ago, it was highest among the recordable years. In April 2010, index retrieved from this situation with significant pullback, as you can see here. And in May 2013, there were also a pullback, more minor. I will zoom in the mentioned period in the next slide. In both situations, the index starts its descent when the red line starts to flat out. The bounce starts after cap on S&P 500 occur. In the 2010 period, there were 1 day 2, 1 day 18, 1 day 4. In the 2013 period, there's only 1 day 4. And here, the orange line right here is showing the support from the pullback. So if we will pull back to the orange level, it's also a potential indication that the index is ready to ascend again. And if you are desire to know about S&P 500 cap, you have the privilege to access Starter A service for free until the trial period expires. Here are the zoom-in picture of traffic light NASDAQ. On the bullish side, the red line made a new high, as the index made a new high right here. This observation is different from traffic light Dow. Second, there are bullish crossover on November 14, 2016. On the bearish side, first, the red line has been descending and has not changed directions, and start to descend on December 13th. And the green line start to descend and coming back down. This piece of information was released on subscriber website on December 13th with the email notification. Second of all, the green line is making a higher high relatively to September period 2016. In summary, traffic light S&P 500 is in green and shows more long-term bullish sign. Traffic light Dow and NASDAQ shows more intermediate bearish sign. Traffic light NASDAQ red line start to descend, expecting fallback. Consider to take some profit on long-term position and increase cash position. With unsynchronized bullish and bearish trades, the market tends to consolidate. S&P 500 cap might happen before the bounce or the red line bounce. Thank you for listening.